This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, Michael Covel. Not filtered, raw, honest. That's my passion. So I had a really interesting time in the last week. I was in Bangkok, and I had the opportunity to take the stage and speak to 200 plus people, entrepreneurs who like to travel and like to have this kind of location independence. And I was invited to speak by Dan and Ian at Tropical MBA. And don't let the tropical part fool you. Most of the people that came from around the world to this entrepreneurial event were just that. They were coming from around the world just to come and meet and greet each other. Great event. Look, if you have any desire to learn anything about being an entrepreneur, this is one fantastic group. This is a good group of people. I mean, I met a ton of people that I'm sure I will be friends with and business associates going forward in the years. Really good stuff. And I'm most appreciative to being selected to speak to this group. It was great. And I didn't talk about trend following. I really just gave my entrepreneurial start. I only wanted to talk about being an entrepreneur. Once again, very appreciative of having the stage. Great audience. You. It's all about you. What I'm going to present today, 5 categories, so to speak, of issues that I want to talk about that all ultimately relate back to the individual and personal responsibility. Number 1, the first issue I'm going to talk about, Nobel Prizes, Don Rumsfeld, and one of the Moneyball guys. The second thing I'm going to talk about, Dave Ramsey on God investing. Number 3, a guy who says you can't beat the market. Number 4, Alan Greenspan crawling out from under a rock to offer all kinds of thoughts. And number 5, letters that I have received, letters. First, let me quote the former Secretary of Defense. There are known knowns. There are known unknowns. There are unknown unknowns. There are also unknown knowns. Things that you possibly may know that you don't know you know. That's a fantastic description of life. Chaos, uncertainty. Just all over the map. That's what we face. Now, recently, in the last week or so, they gave out new Nobel Prizes in economics. Let me read from the press release. Quote, there is no way to predict the price of stocks and bonds over the next few days or weeks, but it is quite possible to foresee the broad course of these prices over longer periods, such as the next 3 to 5 years. These findings, which might seem both surprising and contradictory, were made and analyzed by this year's laureates, Eugene Fama, Lars Peter Hansen, and Robert Shiller, end quote. I really don't want to read anymore. I don't know if I need to read anymore. They're saying right there in the beginning of the press release that markets can be predicted and forecasted. Please, how many people took it on the chin in the financial crisis that had no clue? The best investors, the biggest banks, nobody had a clue. Nobody saw it coming. Well, we can give a few examples. Say John Paulson, Michael Burry, the trend following traders traded the situation correctly, but they did not forecast it. But we're talking about extreme minorities. And here you have the Nobel Prize in economic sciences in memory of Alfred Nobel. And they give out the prizes and winners actually contradict each other in their findings, which is right back to the Rumsfeld quote, uncertainty. Uncertainty, uncertainty, uncertainty. let me continue to jump in the number one category that I want to discuss today. This is an excerpt from, I think his name is Paul DePodesta, and Jerry Parker sent this to me, and he is the number two guy, or was the number two guy to Billy Beane, played by Brad Pitt in the movie Moneyball, and he is with the Mets now, I think. So it's an interview asking him back about the Moneyball process and what happened. And so the question was, what's the guiding principle of your work now? And this is a guy that's in the baseball world, okay? Major League Baseball, professional baseball, something always going to be near and dear to me. What's the guiding principle of your work now? The quote, his answer, the guiding principle of our work is figuring out a way to deal with uncertainty. That's what we deal with every day, an uncertain future. What's going to happen on the next pitch is uncertain. We can't figure out exactly what's going to happen. But if we get our arms around a range of possibilities, that gives us a much better chance to at least make better decisions. We're still going to be wrong a lot, but hopefully we're wrong less often now than we were 10 years ago. But we're never going to be in a situation where our analysis tells us what's going to happen. These are human beings interacting with one another in a highly stressful situation. So we're never going to be perfectly predictive. But that's what makes baseball interesting. It makes it emotional, end quote. Then think about how different, that sounds more like Rumsfeld, right? Now the Nobel Prize in economic sciences, their winners sound different than that. Now, look, we're doing a cursory overview here. But the world is uncertain. As stock markets are at all-time highs, as people are starting to get giddy as you know what, all kinds of crazy investments are starting to flow around right now. Arian Foster, a running back for the Houston Texans. The discussion now, they're going to trade him. He's going to be a tradable asset. You have to think. That's what I want you to think about here. Personal responsibility. So if the world is uncertain, let me move into category 2. If the world is uncertain and you have to take responsibility for your actions, well, let me talk about number 2. Dave Ramsey. Little quick excerpt. Dave Ramsey is overtly religious, and his for-profit Financial Peace University is billed as a, quote, biblically based curriculum that teaches people how to handle money God's ways, end quote. Let's just sit still for a second. Let that sink in. Really, yes. Look, Dave Ramsey appeals to people that are broke. He appeals to people that don't know that when you use a credit card, you have to pay the bill off. That's not my audience. I frankly don't want that audience. Let Dave have them. But my gosh, what a sheeple way to be. These poor people are being led to the slaughter. This simplistic thinking, this indoctrination, the worship of money through religion. It's gross. It's offensive intellectually. And you, every one of you out there, if you pause for a second, you know damn well it's offensive intellectually. This guy's one of the number one radio shows in America. And he's teaching people how to invest God's ways. One of the number one ranked shows. Now, what does that say about personal responsibility? I don't, look, I'm sure Dave Ramsey's probably a nice guy, you know? I think, frankly, what that really says, what his show really says, and I'm going to move into this in issue number 3, category 3 today, Ramsey is simply a figurehead for his audience. His audience already believes this shit. His audience already believes in magical thinking. His audience already believes in lotteries and pipe dreams and all this other kind of stuff. They're already lost. So as much as that I hear that Dave Ramsey has helped this huge army of people to, quote, get better, get out of debt, America is at record debt levels. Record debt levels. Personal, federal, state, it's through the roof. So guess what? Maybe there's a few people that are given some success stories. And so, maybe, you know what? Maybe some people are going to argue there's only a few people giving trend following success stories. I'm going to get to that in a second. But I think Dave Ramsey is simply a figurehead for the beliefs that his audience already has. And these are people that believe that they are average. Look, you only live one time. And in the great Stoic tradition, you're going to die. You're going to die. So why in blazes do you want to be average? Why in blazes do you want to go to an auditorium and stand around with a bunch of people that have no money, who ran up $50,000 worth of credit card debt so they could buy trinkets at Walmart, and you're going to jump up and down and I don't know, yell something about God, right? And look, if you're offended that I'm talking about this, I don't care. Because once again, you're being intellectually dishonest, because anybody that is attaching the idea of finance to mythological religious figures, whether you believe or not believe, it's absurd. And we all know it deep in our gut. Now, if you're in a haze and you've drank the Kool-Aid and you're on a one-way ticket to Guyana to go meet the reincarnation of Jim Jones, hey, that's your cup of tea. Let me calm down for a second, because I'm a competitor of Dave Ramsey. I once hit the number 2 slot on iTunes right below Dave. So I want to beat him, but with an entirely different message. An entirely different message. Let me move into number 3 as I start to get worked up. A guy, I don't know him, Howard Gold, composed this article that I found. And essentially the article is called Case Closed, Almost No One Can Beat the Market. He goes on to talk about the Nobel Prize winners, and he says, I always thought that theory went too far. Individual stocks and whole asset classes can remain mispriced for years, as Fama's fellow Nobel winner Robert Shiller of Yale has shown. But over the very long run, Fama is right. Almost no one who is operating honestly can maintain a persistent information edge over the millions of other smart investors who comprise the market. Well, it depends on where you're looking for the informational edge from. If you're looking for fundamental edges, maybe he's right. I think it's terribly difficult. Terribly difficult. Can I insert the Ray Dalio part here? How Ray Dalio trades a systematic portfolio only using fundamental information. Can somebody do a little homework there? I'd like a little details. I'm still not buying that. But if your persistent information edge is using the price data itself, well, you can find an edge there. And my work has shown for 15 years, you can find that edge in trend following. Now, Howard goes on into his article. He says, some research I've recently come upon clinches it. Fewer than 1% of mutual fund managers persistently beat the market based on superior market timing or stock picking skills. That's down dramatically since the mid-1990s, suggesting either a decline in managers' skills or a great leveling of performance because of technology, high-frequency trading, what have you. Okay, let's jump in, because this is where the rubber meets the road. It's none of that. It's the investors. It's the damn investors. It's the people that go to Dave Ramsey's events. It's the people that don't want to accept the uncertainty that Rumsfeld talks about, the guy from Moneyball talks about. These are the people that simply worry about average. So every one of these mutual funds out there, they're not trying to show you their skill. The hell are you kidding? These mutual funds are not trying to show you skill. What they are trying to do is give you exactly average because they know you're stupid and they want to earn fees so they can drive nice cars. Oh, too harsh, Mike. How about too much of the truth, right? So let's stop talking about mutual fund managers' skills. Their skills are exactly what their investors want. Their investors want crap and they give them crap. Why do the managers give them crap? Because the managers know when they talk, and remember all the emails that came out during the financial crisis and all the big banks were talking about their clients and they were dogs and this and that. Look, all these mutual fund guys are playing this for one game, for the fees, your fees. That's it. They want your money under management. That's what the game's all about. It's not about showing what kind of skill they have or what kind of advantage they have. That's nonsense. But that doesn't stop guys like Howard writing articles using just the pure data to say, oh. And he also goes on to say the more frequently people trade, the worse they do. And he backs up some professors. Well, that's probably true. I mean, Ed Sekoda's talked about this for decades. But guess what? Trading frequently is not the goal. The goal is to make money. So if you could trade a weekly bar system that was very few trades, a weekly bar trend following system, very few trades, what does day trading have to do with anything? Let other people do that. So I think it's the demand. That's where a guy like Howard falls down flat. He's not looking at the demand. He's not looking what the investors want. And the investors want one thing, to be freaking average. And if you're going to be average and all the managers want are fees, boom. I mean, what do we expect? Once again, let's get back to the Dave Ramsey part. What do we expect from a population? 50% of which is obese. Mike, what are you talking about? This is inflammatory. It's not inflammatory. It's statistics. 50% of America is obese. 50% of America doesn't pay income taxes. I forget what the number is. I want to say 50% again, but there's a huge number of the population that has no money, literally no money. Once again, what do we expect? Now, let me interject just a little side note here. Look at the rollout of something like healthcare. Whether you like the president or whether you don't like the president, it doesn't make a difference. There is no right, there is no left. There is the government side and those folks that want government out of their life to a great extent. So when you have a population that's fat, you have a population that's broke, you have a population that wants government as their father. Well, Howard, I'm going to challenge you. You can't write an article about how bad mutual fund performance is and how there's no skill in managers anymore and exclude all these other facts about what the population is and what the population wants. The population doesn't want return. The population wants to be misery with other misery. They're so afraid of losing, so afraid of losing. That's what they demand. That's what they want from their managers. That's what they get. Anyways, he goes on to conclude his article talking about hedge funds and that's not been proven either. Well, I've seen a lot of trend following performance data and it's pretty damn conclusive to me. There's something there. There is something there. But let me make another case here too. So we're talking about individual investors and what they demand. Individual investors that don't have their shit together, basically asking for mutual fund performance that sucks. That's the deal. But what about those people that invest in hedge funds? Well, my friends, and I'm not trying to be patronizing, have you ever met a government employee who manages money for government employees? They have these folks, right? For like the teacher's fund or the fireman's fund. These are outside people that are hired and paid by the government to kind of act like as an allocator to hedge funds. These are some of the most arrogant people you've ever met. There's a guy in Texas, and I'm not going to mention him because anybody's listening that's dealt with institutional investors in the state of Texas pension system. I'm not going to name which branch. You probably already know who I'm talking about. It's one of those arrogant guys you've ever met. Wearing polyester pants and the whole 9 yards. So who do these guys invest with? What's their logic for investing in hedge funds? Once again, they're looking for the same stuff. They're just looking at averages. Because why are they looking at averages? Because guess what? The government employees who are in these funds that need to have their pension money invested, they want average. Everybody wants average. It's not the skill of the manager. It's the demand of the client. The client is driving most of these returns. No one talks about that. Everyone just does to look at only that's what's so damn interesting about the trend following data. Because trend following data doesn't look like the other data. It's different. It's not correlated to all these return streams of the typical long-only hedge fund manager. or the typical mutual fund manager. Category number 4 today. Alan Greenspan wakes up. So I got a little quote I'm going to read from the Wall Street Journal. I'll probably interject a little. This is Greenspan talking. I've always considered myself more of a mathematician than a psychologist, says Mr. Greenspan. But after the Fed's model failed to predict the financial crisis, he realized that there's more to forecasting than numbers. He goes on to say, it all fell apart in the sense that not a single major forecaster of note or institution caught it. The Federal Reserve has got the most elaborate econometric model, which incorporates all the newfangled models of how the world works, and it missed it completely. He says JP Morgan had put out a forecast 3 days before the crisis, saying the economy is on the rise. And as late as 2007, the IMF also said the global risk was declining. Greenspan says, quote, a few days later after the crisis hit, I run into an article and it's titled, Do We Economists Know Anything? Question mark, end quote. So Greenspan goes on to say that he set out to find the blind spot step by step. He says, first, he drew the conclusion that the non-financial sector of the economy had been healthy. The problem lay in finance because of its vulnerability to spells of euphoria and irrational fear. Studying the results of herd behavior provided him with some surprises. Quote, I was flabbergasted, he says. It upended my view of how the world works, end quote. He goes on to say, he concludes that fear has at least 3 times the effect of euphoria in producing market gyrations. Quote, I wouldn't have dared write anything like that before. He goes on to say, wow, this is the guy, seriously, growing up, this is the guy that the entire world worshipped. Worshipped this guy. Worshipped this guy. He doesn't have a fucking clue. Not a fucking clue. How many years was the head of the Fed? Not a clue. Zero. Zilch. Academics in government making the shots. I'm a little fired up today. I mean, it's just the level of incompetence. When you add all this stuff up together, you look at the Nobel Prizes going out and they tell you in the press release it's contradictory. You listen to Dave Ramsey, he's talking about God and the Bible and investing your money. This other guy, all he's looking at is the data of mutual fund managers who are simply delivering what their inept clients want. And then Greenspan says, well, no one made the correct prediction. Notice he's actually contradicting the Nobel Prize people that say you can forecast this. Greenspan's saying, well, the evidence, maybe he's getting it right now, finally. The evidence says you can't. Let me calm down and continue with this article. Studying the minutiae of the events leading to the financial crisis brought to mind some lessons from his famous friendship from the 1950s on, the late objectivist philosopher Ayn Rand. He said that Rand didn't influence him politically. He was always a libertarian, but she did point out tensions in his philosophy about life. Quote, she caught me in contradictions, which shook me, and I said, my God, she's right, he says. Mr. Greenspan then believed in analysis based mainly on hard science and empirical facts. Rand told him that unless he considered human nature and its irrational side, he would miss a very large part of how human beings behaved. And at the time, they weren't discussing economics, but today he realizes the full impact of emotions and instincts on the markets. He's also come to admire psychologist and Princeton University professor emeritus Daniel Kahneman and his work applying psychology insights to economic theory, for which he won a Nobel Prize in 2002. Well, I know I'm a little jacked up today, but it's just kind of amazing. You look back and this guy, Alan Greenspan, who was a saint, he was a god. He was a guy that someone like Ramsey would have worshipped. I know CNBC worshipped the guy. Everyone worshipped the guy. And he comes out now and he writes a book and he says he doesn't have a clue and he didn't know what was going on. Now, why does that make you think that any of the people currently in government right now have a clue and know what's going on either? Well, my friends, and once again, I'm not being patronizing when I say my friends. I hope you are my friends. The people in government right now have no clue as well. I mean, just simply look, once again, look at the current event with the United States government rolling out a website that they spent $500 million on and people cannot even sign up for. What does that mean? That means, forget the politics, that means that the government spent a bunch of money and got fleeced by contractors who probably had no clue what they were doing and did not even deliver a functional product. None of this is functional. Once again, let's get back to the idea of uncertainty. Let's get back to the idea that you can't understand all the fundamentals. This is where trend following makes its mark. Trend following makes its mark by avoiding all of the nonsense that I'm talking about. All of these people that I'm reading up on and putting into this podcast that literally make your brain hurt. I think I'm actually having a bad podcast right now in the sense that even reading one line from Dave Ramsey gives me an aneurysm. I start to get like a pulsating feeling. Like there's probably something going on in my head. Hopefully I'll make it. It's a beautiful rainy night here in Saigon, but yeah, that guy just causes me to have issues. But on a happier note, I want to read a couple letters really quick. It says, "Hey, Michael, this is Moon here, the lady who you chose to sit beside on the first day at the recent conference. I hope you remember me, considering the serendipity of what your coconut jam has given you." She gave me some coconut jam. It was very nice of her. "I hope you enjoyed that. As you might have not known, because we haven't talked much, I've been a great fan of yours since you wrote the book, The Complete Turtle Trader, and very honestly, that's what shaped the great mind frame for discipline and psychology in trading for me. I'd even say it takes up a good 30% of what I do every day. Next time you're in Singapore, I'm going to have to ask you for your signature. And you don't know you met a huge fan. I was just holding it in." Well, it's nice. Moon, you were cool. I liked Moon in Singapore. Anyway, she goes on to say, "Last but not least, I've really taken good direction of what you've suggested to me to write a book. And really just looking at the content page, I can really foresee an extremely invaluable and good book coming up. And why I say that is because I took myself out of my shoes of an author and I put myself in the shoes of a beginner or a novice who knows nothing, who's interested to learn about skills in trade. And in that perspective, just by looking at the content page, it sells." I think she's right. And we just to not read everything she wrote here, but just a young person, and she was in the trading space and she was helping people learn. And she said, write a book, do the research, write a book. So she was very cool. Great jam, great coconut jam. A second letter. "Mr. Covel, thank you for sending the DVD with the trader interviews and additional information. I've been listening to your podcast for a while now. Read your little book of trading and all of your prerequisite articles posted on your website. Additionally, I've read Seth Godin's Linchpin, and thank you for turning me on to his work. I've been a big fan of self-improvement genre in general. Also read Jack Schwager's Market Wizards. At this point, I don't need to inundate myself further with proof of the efficacy of trend following, though I find it inspiring to do so. I was once shown the framework of a trend following system used by a veteran trader and have been using that to manage ETF trends in our IRAs. As explained to me, it was overly simplistic and remains a work in progress for me to refine it. I'm interested in your system packages as both a means to trade as well as a means to learn how a developed system works. Everything I've read tells me that just adopting someone else's system is difficult to trade psychologically because the trader himself did not participate in its development and thus cannot fully trust its efficacy when the going gets tough. Does your package include any ongoing coaching or mentoring to help the trader through these hurdles? Who would do that, and what is their experience?" And I go on to say, look, my firm does this. My firm provides support to clients. It's a process that I've been doing since 1996. It's built into the flagship price of our training materials. The support is led by myself and other people that work for me. And look, the rules I teach can be adjusted in terms of portfolio selection, risk choice, and that alone is useful for personality differences. Look, some people might go for more return, more risk, others less. But I think the personality fit debates are overdone. You might want to take a look at my second book on the turtles. Trend following can be taught. Richard Dennis saw it. I've seen it. If trend following is not for you or whomever, I always wonder about the other supposed options. My head started to hurt again. I'm thinking of Dave Ramsey. So, and frankly, that's one thing you could do. And I'm not being a sarcastic ass when I say this, but I think you could literally never listen to another podcast of mine. You could never read another book on finance, another book on trading, never do any more homework. Simply, all you need is the Bible. Let me move on. That was sarcasm. So I get some more feedback. Somebody says, "Mike, I'm very happy to correspond with you. I've read 80% of all trades are losers. Do you have statistical data regarding the success of traders after having taken your training and applying your systems? Thank you, Terry." Great question. Look, I can teach clients. I can't force anyone to disclose anything or track their brokerage accounts. Frankly, I don't want to force anyone to do anything. I have a ton of success stories on my website, But ultimately, this comes down to you sticking with the trend trading system. I wouldn't worry about your neighbors so much. See, this worrying about your neighbors so much, this is the average mindset that I've been talking about during this podcast. This is why mutual funds deliver average. This is why everybody that shows up at a Dave Ramsey event is average. Average, average, average. Let's get back to it again. Stoicism. Rule number 1 in my book, you're going to die. You're not going to make it. You've only got limited time. Do something big. Do something big. One more letter I want to read. Hello, Michael. I'm an avid listener to your podcast interviews with trend following traders. I became interested in your interviews partly on account of some recent research projects that I've been working on involving trend following. As a bit of a background, I'm a professor at blank university. I published extensively in leading scholarly practitioner journals in finance, including the Journal of Finance, Review of Financial Studies, and Journal of Portfolio Management. Please forgive the journal name dropping. As an academic, I can't help myself. Publish or perish. He also serves as a consultant to a major bank, and he attaches his bio. He talks about his trend following research, multiple papers, talks about managed futures, and he says, given my recent research and your passion for trend following, it may be worthwhile starting a dialogue. As you're probably well aware, academic research has historically been highly skeptical of trend following. However, there appears to be an increasing willingness to engage with trend following in the academic literature and to understand why it is used extensively by many successful traders. I'm excited about participating in this literature, and it'll be very interesting to see where it leads. And he goes ahead and he says, hey, let's contact. I think that we're actually speaking tonight on the phone. I think we're going to be talking on the phone for the first time tonight. I even before we talk, I kind of have to disagree with him in the sense that when you have the Nobel Prizes going to Fama, you've got every article in the Sun talking about how you can't beat the market. You've got QE to infinity. You've got funny stuff starting to happen in the investment schemes being sold to people. You got Dave Ramsey selling Bible Finance. I don't think the acceptance is really happening. But that's okay. Whether you want to be a trend following trader, whether you don't want to be a trend following trader, this podcast is to get you to think about words and meanings. When revered Fed chairman do mea culpas years later and say, we didn't know what the hell we were doing. When the number one radio talk show host is talking about the Bible as a means to invest. When the Nobel Prize goes out to two different people whose work conflict in the same field. It's just messy. And if it's just messy, what can you do to make money when it's messy? You can be patient and you can have a system. And your system is going to be based off the price movements. Having a system based on fundamentals is insane. I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.